This is Morning Stock Watch with the weekly market report for the week ending June 26, 2020. This report includes the broad market, market sectors, large movers for this week to include AMD and Facebook. Starting with the S&P 500 ETF, SPY. Weekly closing price $300.05, down 3% since last week's close. Looking at the weekly chart of SPY, we can see the chart is presenting a look of potentially changing price behavior. Last week we said the SPY would possibly do either of two things. One was to possibly make it back up to the highs of 323.50, the top of the breakdown candle, or two, possibly revisit last week's low of 296 for another attempt at going lower. For this past week's candle, we have some mixed readings. First, we have an inside week close with a considerable upper wick at the top of a bullish trend and continues to trade above all moving averages despite the bearish price action the past few weeks. This inside week or inside candle refers to in respect of the current candle's open and close being lower and higher than the previous candle's open and close. Much of the time, the market will see this as continuation and move accordingly. But in this case, continuation to which direction? This week and last week shows long upper wicks that gives a bearish tweezer appearance closing just above $300. We continue to have support and resistance here with this breakdown candle. Support at 296 and resistance at 323.50. We can clearly see lots of choppy price action with some hints of further downside below 296 support. This week we show lower volume than last week, which is appropriate. This week's candle is shorter than last week's and doesn't really tell us anything. However, the consistencies of the last several candles continues to suggest downside. On the 4-hour chart, we can see better a couple different patterns that are both bearish and bullish. First, we have the larger descending wedge pattern that can be seen on as high as the weekly chart, but much easier to see price responsiveness on smaller time frames. This descending wedge suggests that price is searching out a number before making a possible move in the opposite direction. Also, we have a head and shoulders pattern that suggests that there could be more downside inside the wedge next week. Looking at the 11 market sector ETFs, simply looking at the weekly candles in comparison with the S&P, nothing surprising here. All sectors are red. This week the market led lower by energy and utility stocks. The financials caught right down the middle. QQQ and XLK for tech both have high volume shooting stars just after a weak move up the previous week, possibly revisiting some support levels in tech. With this known, could this possibly aid the market's price lower in the coming weeks? Now let's look a bit closer and see where the S&P could actually be going. As always, there's two sides to every trade, and the idea is to be on the good side of the trade more times than not, with each trade having limited risk. That said, let's see where this thing can go. Real quick, on the monthly chart, we have only 2 trading days left in the month, and we have a shooting star candle with high volume. This seems bearish down to at least 290 or lower. At this point, for anything much higher, we need the month to close well above 323.50, which doesn't look likely. On the daily chart, we have those patterns we referred to earlier, the descending wedge and the head and shoulders patterns. The descending wedge suggests higher prices after a lower target is made. And on this chart, that number looks to be about 290. This also happens to be the top of the monthly breakup candle we just looked at. And the head and shoulders pattern suggests we have more chop to get through, starting out next week with lower prices below 300. And next on the list is AMD. Weekly close of $50.10, down over 7.5%. The past couple of weeks we observed the choppiness of AMD as it got closer to $60. The chart displays an ascending wedge pattern, which is normally bearish once it hits the target at least once. We believe the price would revisit a support level at $50. This is exactly what happened this week. This week price made it to as low as $49.45, but not closing below $49.88, which is the closing price of this gap down candle here. On the daily chart, we thought there was a chance that price could have made another attempt above 58, but felt immediate downside was more likely due to the appearance of the weekly chart. The last candle on the daily chart has closed below the 100 period moving average with high volume. This suggests that AMD may have a little bit more to go to the downside. Doesn't look like anything too wide in terms of price if the market continues sideways for a bit. And last we have Facebook, weekly close of 216.08, down nearly 10% since last week's close. This week we have an extremely large weekly candle to the downside, just after a good bit of negative divergence inside of a bearish ascending wedge shown here at the 240 area. We also had some inconsistencies between price and volume, starting with the first breakdown candle, then with the high volume doji, and then this week with finally a large move down. 212 support is here at the bottom of this large breakup candle, but price was halted by the moving averages. We'll need to see where next week's candle ends, but who wants to wait all week? Let's look at the daily chart. The daily chart, we see more clearly the ascending wedge and the bearish divergence on the RSI and MACD. There's a very large amount of volume on Friday with the very large move down. This lets you know that something is going on with the company. If it wants to, price can get as low as 200 this time around, maybe lower looking at the size and volume of that last candle. The 100 period moving average is at 208.26, the 200 is at 199.80. Those along with the breakdown candle highs and lows will be good areas of support to watch out for. If any of the targets are reached, then another study will be needed to determine the next price move. If you found this report useful in any way, please give a like and subscribe. Thanks for watching, and hope to see you next week for another weekly report.